Hi, I'm Jo from Mooney & Co Estate Agents, and today answering all things in finance and how to buy houses and how to move is Margaret.
Margaret from Finance Path.
Bridging loans.
Yes.
So many people are very scared of them. So many people have a very wrong impression that maybe from days gone by of what they are, how expensive they are.
Yep.
What's the reality today?
Look, I don't think people should be scared of bridging loans. They are very handy to have when somebody is buying and selling and buying, you know. So often clients don't have the ability to marry up their settlement dates and their purchase might settle before their sale settles. So that's when you need a bridging loan, just for that short period of time. So it does look scary when we first do the numbers for a bridging loan because it's worst case scenario. It could take you 6 to 9 months to sell your house. So we have to factor 6 to 9 months worth of interest. You're on the standard variable with most cases, which is high, and the interest is capitalising, so it's adding on itself. So when you look at the worst case scenario in the numbers, it looks scary. It looks like it's really expensive. But in reality, most of the time, people only need a bridging loan for 2 or 3 weeks, a month,
So, because some people I speak to believe that if they've got bridging, that they have to pay all the interest and everything up front for what they think they might need. And that's the perception out there.
Yeah, no, so absolutely not. So they only pay interest on what they need,
So for the time.
So when we first calculate a bridging loan, we don't know the parameters, right? So we have to work on worst case scenario. But once we've got contracts, once we've got a purchase contract and a sale contract, we can more accurately calculate this is what the cost is going to be, and it's not as scary. And the other thing is you actually don't need to make any repayments during that bridging time. So there might be some people that have got $1.1 million loan in that small, and there's no way they could afford to pay that size loan. They don't have to pay anything for that period of time. It's not till their sale settles do they start to pay a repayment, and it's based on the residual of the debt that's left over. Yeah, and then it converts to the normal interest rate, not the ridiculously high, standard variable.
Okay, so let's just say someone does take a $1 million bridging loan.
Yeah.
What's the numbers? If they need it for a month.
They need it for a month. So it's interest based on a month, right? So don't have a calculator with me, but let's say the standard variable is 8%. That's $800 divided by 12.
Don't ask me.
You're getting me to number without a calculator.
No, I'm saying that.
Yeah. So it's, interest is calculated on a daily balance, right? So it's not 12 months worth of interest.
It's 30 days or 45 days or whatever it is.
Yeah, exactly. So
is there application fees?
No, there's just the normal fees. There's no additional fees for the bridging loan. It's just normal application, normal valuation fees. So if you have an existing, there's not a lot of lenders that are doing bridging finance. There's only a handful. I'd probably say there's 3 or 4.
Yeah, okay.
So if your loan is with a lender that doesn't do bridging finance, we have to refinance that existing property and bring it over to wherever the new loan is going to be, wherever they offer the bridging finance.
Oh, okay.
Yeah. So
again, planning.
Yeah, planning. Yeah. So you've got to bring that loan across, and then we calculate what the peak debt is and then what the end debt is, and we do 2 separate loans. And so when you sell your house, it pays down the debt, and then you pay the loan on the end debt. Now, interestingly enough, for servicing, to calculate whether a person can afford a bridging finance, we calculate it on the end debt, not the peak debt, right? So if a client's going to have no end debt, there's nothing. Anyone can get it. Don't need any income.
So, okay, let's look at someone who owns their home. They want to downsize. a lot of people, look, having your house on the market is overrated. It is not that much fun to live through. There's a lot of things going on. There's a lot of inspections and access required and all those sort of things. So if people then want to move out, if
they've purchased and settled on
they've purchased and settled on that, but the funds that they're going to get from the sale of their family homes, I'm going to say a downsizing, right? Now, this won't work, obviously, going into retirement villages because they're not a lendable product. But if you're going into a unit, independent unit, that sort of thing, and the end, once they've sold the family home, they're going to have surplus funds, but they obviously wouldn't qualify for a traditional loan. Can they bridge?
Yeah, because there's going to be no end debt.
Yeah.
Absolutely.
I didn't know that.
There you go, you learned something today.
I did. I like it.
Yeah, so it could be, like you say, pensioners, they've not even a pensioner, right? Like it could be, let's say, husband still works but wife doesn't work anymore, big family home, it's 4 or 5 bedroom house.
Too big.
Now they just want 2-bedroom townhouse or something, you know. And it's too hard for them to keep the house. They've got 3 cats and 2 dogs, and it's too hard for them to keep the house clean to sell it. So they can purchase a property, settle on that new property, and we've used both properties as security. And once they sell this one, it pays that debt down. There's no end debt, so we can do that bridging loan.
That actually opens a hell of a lot of doors.
Yeah.
That I genuinely
don't
believe
think people
a
know
lot
about.
of people don't know are there as an option.
Also, people don't realise that you can do bridging finance for construction. It's rare, but you can do it. So, Sue, what do you mean? I'm going to teach you something else. So, I've got a house, I bought a block of land, want to build a house on it. But I don't want to sell. I don't want to sell my house and go and rent somewhere where I'm building my house. So you can stay in your existing home and build the new place while you're living here and have a bridging finance for 12 months, right, while your house is being built. Your house needs to go on the market just before your,
so about 3 months prior.
And so that it all lines up, and then you move into the new house and voila.
Because again, you have to settle. No, you don't have to settle on the same. No. Yeah, wow.
So you've actually settled on the block of land before you've sold your house. You've settled on the building contract. The house is getting built.
So you can actually then move into your new build home, stage the old.
Your house, generally speaking, and I say generally because there's always exceptions to the rule, right? But generally you need to have put your house on the market just before your house is ready to be moved into, right? So we need to see evidence that you are
on the market.
That you're on the market.
Which is pretty hard to fake these days because,
Google. So you get your house ready to sell and it's on the market, and it's on the market for a couple of weeks before you move into the place.
Did not know.
There you go. So bridging finance is really handy to have. And people don't need to be scared of it. It's not as expensive. And the people are getting advice from their parents or their grandparents, right? And those days it was dodgy.
It's like, what do you mean?
Bridging finance.
That was like taking out a loan at Cash Converters. It's like, what do you mean? It's Wallet Wizard now, I think it is.
But there is not a lot of options for bridging loans, but there are some out there. But again, you need to speak to a broker, because there are some lenders that if there's no end debt, they don't want to know about it because they're not going to get paid anything for it, so they won't do it. But then there are other lenders like, we're fine with it. We're fine with no end debt, but which ones, right?
Yes, and I'm tipping if Joe Blow just rang up to find out, they probably wouldn't get as much information as what they would need.
To be honest, bank staff don't know a lot about bridging loans because they just don't get that many inquiries. So they're just like, I
kind of feel like there should be more. I kind of feel as though
you know why I think they don't offer it? Because they don't really make much money off it.
No, and why would a bank do anything?
They're not going to make money.
It couldn't possibly be that it will help their clients and the relationships moving forward would be
do
stronger.
the right thing by the client. No, yeah, it's weird, isn't it?
Strange. Doesn't please the shareholder.
Yeah, but
Yeah.
yeah. Look,
No.
to be honest, there's a lot of work involved in a bridging loan, because you're effectively doing two loans,
yeah.
and the numbers are mind-blowingly complicated. And I have a I have a maths degree, and I go, the numbers are. Yeah, so there's a bit of work involved.
But if that's the way the transition can happen to get a client to where they want to be, then
you know, in my experience with bridging loans, I will prepare a client for a bridging loan, and I'll say, look, this is your backup plan.
Yeah.
We need to know that if you can't marry up your settlement
Then
dates,
you've got
that
options.
you have got options to do a bridging loan. So this is what the bridging loan numbers look like. But
we're not planning to
we're not
use
planning to use it,
but we've got it.
but we've got it there as a backup. You know, I want you to be able to marry your settlement dates up, so you need to talk to the agents on, you know, with both properties that this is what you're planning to do. But, you know, there's so many other people involved. It's a domino effect, right? There's a buyer and a purchaser, and there's a buyer and a purchaser, you know, and it goes on and on and on. So sometimes it's not possible to make those dates. So it's good to have the bridging as a backup.
Yeah, and it's the same thing, like from my perspective. So one of my clients recently has a settlement like we've sold. They're then going to purchase again. The property that they were keen on was vacant. Now, verbally, I've got an agreement from their buyer that they are more than happy to bring settlement forward. We've got a verbal on the property that they like that they'll be flexible on settlement. But at the same time, I'm like, you sign nothing except for this date here with the express understanding that, yes, everybody is working towards it, but don't forget, things can happen in people's lives that change things overnight, and verbal is one thing. If you haven't got a plan B, if you haven't got a backup on that, you can't 100% rely on someone has verbally said, yes, we'll do this.
I will move the date forward. I've had that happen.
I have, me too.
The vendor's happy to move the date, and then so I'm, you know, sending emails to conveyances and I was settling earlier. No, they don't want to change it now.
But it's even worse when there is something else linked to that. So it's before you start messing around with all of these dates and all those sort of things, knowing what you can do and what access you've got. Let's just leave it.
So just one thing I think to consider with bridging finance is if you don't have enough equity in your existing property, you may not be able to do the bridging finance, because the maximum you can borrow is 80% of the value of the two properties. If you're already at 80% on your existing property, there's no room, because there's no room to add the costs in, the interest and the stamp duty and so forth. So, you do need to make sure that you qualify for a bridging finance, and it's not to do with your income. It's really to do with the equity
with what you've got, what your asset, I call it the brick piggy bank. A house is a brick piggy bank to me.
Yes.
Because that's essentially, you can imagine all your insulation is like $100. That's a brick piggy bank. So you've got to have enough in the bank.
Yes.
To be able to.
Yes. So it's not as simple as like, I can just do a bridging finance. No, we have got some checks to do first.
Conversation worth having, because it's not as scary if you qualify. It's not the financial side of it is what I think has put most people off.
It's because of what they heard. The word bridging is like a swear word. And they're like,
I'm not doing that. It's because it used to be.
And I actually even know that there's a lot of brokers out there that don't understand bridging finance, so they talk their clients out of it as well, because they're scared of doing the numbers and they don't understand it. So they're like, oh no, you don't want to do bridging. So that's a myth, everybody. You know, you just have to find a broker who understands bridging finance. Me.
So.
That's another song about me.